Good gravy, I hope you had your milk and cheese because you are gonna want to be clogged up for this one. Guys, in this webisode, we're gonna be giving you 3 reasons why this is an absolutely insane level of support that if Bitcoin does not hold, we are going to see a more substantial drop. There's actually a lot of things going on this chart, and we are going to be jumping and jiving into these charts. And we will know on these shorter time frames, if we break this key support, we'll be heading down to this key level here. Guys, altcoins are getting absolutely flushed, and Ethereum, one of our key major altcoins to watch, is actually at a very key level, potentially on the brink of heading to that downside target that we've been mentioning for quite a few weeks. And we will be talking about the SPX because this has really been a guidebook to what a lot of the cryptocurrency market will do as well. And as well, we'll be taking a look at this report saying Bitcoin price is more sustainable than a similar rise we saw in 2019. And as well, we will be taking a look to the stock to flow cross asset model as well. Wow, welcome back, you beautiful men, women, children, furries, and balloon lovers. Because we have a lot to be delving into in this webisode, and Bitcoin is at such a key level. And in fact, we have this new ascending channel we're going to be taking a look at as well that we have been in with Bitcoin's price since the middle of March after the epic crash in the global market. So we're going to be diving into all of that in this webisode and what exactly we think is the most likely next scenario. And guys, is this a good time to buy or is this an absolutely bad time to buy? And we're going to be covering some alts as well because the alt market has absolutely been fiddled and diddled over the last few days, guys. This has been tragic. So as well, if you're new to the channel, make sure to smash the subscribes and turn on those post notifications so you get updated when we upload new content, guys. And as well, if we can hit 1,400 likes in this webisode, then we'll be giving away this ledger in the next webisode. And as well, leave a comment and subscribe to enter, but leave a comment on what your price prediction for Bitcoin is for December 31st of 2020. And wow, guys, as well, make sure to leave your comment below if you agree or disagree with these following comments, as it seems we've been under attack by Harry Potter fans across the nation. Guys, it's been absolutely huge. Are these Harry Potter attacks warranted or unwarranted? Let me know below. Wow, so without any further ado, let's look into these charts, guys. So one clear thing we see on this daily, we can start off simple enough, is that we're still below this 21-day moving average, this blue line here. But as you can see by this horizontal box we have drawn in here, this is a very, very key level, and we're going to go more in depth with this specific level on another chart. But this is very big, right? One thing we don't want to be doing if we don't want to see more downside over the coming weeks is set a new lower low below 9,800, okay, where we bottomed out back at the beginning of September. So that's going to be a key area to watch. But if we switch to this chart here, we're currently finding support right around 10,450-ish roughly. We've been bouncing here on these four-hour candles for like, let's see, it looks like about 10 4-hour candles here. So a significant amount of time. And this was a level of major resistance we faced from the beginning of September all the way until September 14th. And if we break this, I obviously think we're going to go at least to minimum, probably below $10,000 again, which is huge. And guys, we still have this drawn here because this hasn't been filled, but this is the CME gap, which again, I think is kind of irrelevant at this point. However, it does look as though this is going to be more and more likely to fill as this momentum so far has been shaping up, right? The trend now is downwards, and the trend is our friend, right? So until we get any kind of reversal indication, the trend is still down, guys. There's no immediate reason in the short term on these charts for us to see another break above 12K anytime soon, right? We have the momentum obviously shifting downwards ever since the dump on the very beginning of September, right? September 1st, the first day of September from 12,000, that final rejection at 12,000 that brought us actually below 10,000 US dollars. So that's something to watch out for. And it looks as though we might actually come back to test this 21-week moving average again after getting multiple bounces on these weekly candles. You can see we're only about $400 above this level right now. So again, momentum still shifting downwards. Something we have to take note of here as well on this weekly RSI is we're now coming back down to curve down to this 53 on the RSI, which is absolutely critical. We've talked about this before. The entire bull market beginning at the end of 2015, going into the very, very first month of 2018, we were bouncing at this key level. We had 4 major bounces here on this RSI, right? Back February 16th, February 2016, then August of 2016, March of 2017, July of 2017, and we failed to hold that in January of 2018, the very last few days of January 2018, and that is really when the bear market was confirmed and we entered a multi-year bear market. And now we're coming back to test this. You can see over the past 4 months, we've already tested this 1, 2, 3. If we come down and test this again over the next few days, this will be the 4th test in just the last 4 months, right? So we've been really hovering on this very key level on the weekly RSI for a while, and we have not been able to really get any very bullish momentum out of this just yet. And guys, what's absolutely huge, the main portion of this video is what I want to talk about is this. So ever since the March crash, we have been in this ascending channel, right? So I love ascending channels. I found them to be super reliable over the past few years. I like them a lot. And so far, you can see, we'll just illustrate this here quick. We came down, we bounced off the bottom of this. We faced initial resistance along this line. We traded in here for quite a long time. You guys see, this was obviously a very ascending structure here. And then when we came down, found support right at the bottom, bounced to the top of this structure, found support right here on this line, up to this one, down here to this moving average. But ultimately, we're trading within this range here. Ultimately here, just continuing to fall. And then when we get down to this portion of the trend line, we bounce up to this next trend line where you can see we're facing heavy resistance for over a month. And then we get a rejection here. As we fail to hold this, you see the next leg down from 11,005 all the way down to about 9,009. Okay, so over $1,000 drop. And now we've been hugging this for the entire month of September basically. But what's absolutely key now is that we're at the very, very bottom limit of this channel. So this is huge. So if we break out of this, I definitely think we're in store for a much bigger dump. And what's key here is this exact level you can see illustrated by this dark blue line is exactly where we faced heavy, heavy resistance over the last year, right? Initially back on the end of October 2019, back at the beginning of February 2020, and then from the beginning of May all the way basically until we broke out at the end of July, so multiple months, this was a big level of resistance. And usually what you want to see is this huge level of resistance turn into support. And we've already kind of broken through it on some smaller candles, but we got back above it. But if we actually concretely break this, then guys, I don't see how we wouldn't go significantly lower in the short term. Huge. And if you guys are interested in trading this market, make sure to sign up with our links below. We have some of the highest bonuses on YouTube and a 20% fee reduction for trading on Bybit for a limited time, guys. So if you're interested, if you want to support the channel, and if you have experience trading, make sure to sign up below. And I just want to reiterate this as well, guys. This is going to be one of the last great buying opportunities wherever this final drop lands us, right? Again, we said the trend right now is down. So even if we bounce up and down for a few days, ultimately, again, the trend means it's still going down. So until the actual trend reverses, because guys, a lot of people look at these charts, this isn't a trend reversal, okay? So we come down here and then we bounce a few $100. Guys, that's not a trend reversal. That's literally just the trend playing out, right? It's a lower high. This is nothing significant. So we come down to 9.9 and go back up to 11. That's not anything significant at all. This is the overall trend. This is the trend now. We have a high, lower high now. This is the trend. It's down. So until we actually get a confirmed trend reversal, which would look like a higher high on these charts, or a significant volume injection at one of these key levels, which we could see if we get a very nice bounce here, which we're not seeing. But if we break below this, guys, then again, I think we're going to go much lower. And actually, the target I have lined up, I have two targets. One of them I think is more likely, and one of them is just a very important one. So the first one is the 200-day moving average, right around about 9,200, which as well, guys, would fill that gap. 92 is important as well because it provided support multiple times over the past year, specifically along this major pattern before we broke out to 12.5K in the middle of this year. But yeah, I'm targeting that level, about 9,200. And as well, ultimately, I still think this target that I've been talking about for weeks now, about like 86 to 8,700, is still in play. And so that's critical, okay? That's key. What I'm eyeing up, if we get a break out of this, I think minimum we're going to be going down to at least 9,200, but more likely about 86 or 87, guys. But again, keep in mind, if that would happen, I think we would see a massive return to volatility, and that's exactly where we'd be looking for a trend reversal, meaning a strong bounce, okay? So those would be areas I'm eyeing up for a very strong bounce if we hit them. Huge, guys. Now, if we jump over to Ethereum, you can see, I mean, this chart just illustrates it really well. Ethereum is on the brink. We have to hold support here, otherwise we're also going to be going down. And this is kind of being mimicked across the entire market as we see altcoins across the board bleeding. I'm not even going to pull out CoinMarketCap because I'm sure you guys already know it's just red after red after red. But again, Ethereum, we're still targeting the $290 level if we get the break from this $330, roughly $340 level. Chainlink, we're still targeting about $7 on the downside. And guys, obviously the S&P is huge. If this would come down, actually yesterday we had a pretty interesting candle where we closed extremely bullish, right? Where we come all the way down and essentially 90% of the candle yesterday turned into a wick. So this was a very nice indication so far in the short term. So we could actually be seeing some upside over the next week, but ultimately, until we break back above the 50-day moving average, this is still very bearish. So until we break above 3350 on the S&P or the SPX, then yeah, this is very bearish, guys. So even though this actually might be a short-term bounce up to these levels, I would expect a rejection here. And if we didn't get that, then we have the possibility of discounting a further drop for Bitcoin as well. And guys, huge, a new report saying Bitcoin price in a more sustainable uptrend. So the only things I want to cover here is that exchange balances at the time increased, while this year they continued falling despite price rises. What this means is that overall selling pressure among traders and investors is less this time around. What it suggests is a more sustainable move upwards for Bitcoin in comparison to the rally in 2019, as data indicates a holder base with longer time horizons, meaning people that are in it for the long haul and are expecting a macro move on these charts over the next year. When price increases and BTC stock decreases, this indicates a Bitcoin accumulation trend. The researchers nonetheless state. But going forward, threats to Bitcoin stability notably come from the outside, with both safe havens and traditional macro assets hinging on strength in the US dollar. And then as well, guys, I just wanted to take a look at the S2FX, which is not the stock to flow. It's actually the updated version, the stock to flow cross asset model. And you guys can see here, obviously, we are floundering here underneath this, but we have seen this prior, especially back in 2016. But ultimately, you guys, a significant dip, maybe $2,000 or $3,000 more, would really make this model look kind of wacky, unless we got a very, very strong bounce after a drop like that. Meaning, let's say we do come down to 8,000 or around that area. If that would happen, we would need a very strong wick for this S2FX Bitcoin stock to flow cross asset model to remain valid. Huge. And if you guys are interested in trading this market, make sure to sign up with our links below. We have some of the highest bonuses on YouTube and a 20% fee reduction for trading on Bybit for a limited time, guys. So if you're interested, if you want to support the channel, and if you have experience trading, make sure to sign up below. And as well, 10% off T4 if you want to learn trading, follow along with my portfolio and our Telegram. Make sure to use the code BILLIONS at checkout to get 10% off. We're actually in the process of updating some of the TA courses in there as well. It's a one-time payment.